warning signs of correction ahead on S&P ASX200. That's what I'm going to be sharing with you. Also, a couple sectors that I think could outperform if we indeed have this correction. Let's have a look. Hi, my name is Les. I'm Chief Analyst of BG Trading Australia. Today is 13th of June, 2025, and I'm going to be sharing my thoughts on the S&P ASX 200 and potential correction ahead. I'm going to show you my modeling and why I think we could have a correction, but it's still in uptrend, still in a bullish trend, which means I wouldn't be shorting the market at the moment, even though the market is trading at all times high. We even could see a potential breakout to the upside within the next few months, probably in the second half of 2025, but in the short term, a 5% correction is very likely. The reason is obviously tensions in Middle East are escalating with Trump, and then therefore there is a room, especially after this 20% rally that we had since Trump's tariffs was announced, and then obviously this was a remarkable rally. We haven't seen that since 2020 at the pandemic, and then after a remarkable rally like this, 5 to even 8% correction is very likely. However, I'm trying to be very optimistic here, unless obviously things start to, the macro geopolitical environment starts sort of degrading. But I will be expecting a very healthy 5% correction right here, bringing those candles into a fair value here back into the SMA 250 and the SMA 40 levels, which pretty much at the fair value of the market at those levels right there. The RSI also confirming a potential correction ahead. As you can see here, the market was, we had this bearish divergence, which was suggesting this, sort of collapse. And it's pretty much what we saw in ZIP. If you missed that out, take a look on the video from yesterday. So there was every time the RSI was reaching this sort of a bearish line here, it would bounce down, and then we bounce back and bouncing back, and then finally crossed into a bullish trend, as we saw with ZIP. After this very remarkable rally that we had with with confirmation of this bullish intersection right here, the yellow line crossing the red line as well, and then ultimately the yellow line crossing the pink line. So double bullish intersection of those moving average right there. Now let's talk about the sector that I think could outperform. Obviously, gold is one of the main sectors. Gold has been sort of taking a little correction because everything was too good, but then obviously then things now start to invert, and then we could see gold moving higher again. As if you look at gold prices, there are potential breakout of a resistance as we speak. So you just got to be careful if you are looking at stocks that could outperform the market during a potential correction, during geopolitical tensions. So gold is one of them, and then obviously defense stocks like Drone Shield, for example, or EOS. EOS already have been rallied. Drone Shield has been rallied. We had video about Drone Shield in this channel. We even traded Drone Shield recently, look. Again, you got to be careful. You got to be diversified. Stocks that could potentially take a hit if we have this correction are the high-risk stocks, especially if the correction is a result of a geopolitical tension. So high-risk stocks like tech and growth stocks, at least for the short term, especially ones that doesn't have much of compelling fundamentals behind. Then also mining companies, companies that like a BHP, Rio, Mineral Resources, all those stocks could also be negative affected, and then therefore helping to bring the index down. As you can see here, these all those Ono Hikinashi candles, we finally saw a end of a bullish momentum here on the candles itself, with this red candle popping up, which suggests that we might definitely end this sort of a rally cycle. and we could be entering into this correction. So I'm expecting more red candles along the way over the next week. So next week doesn't look very exciting for me, as well as the following week potentially we will take into a mild correction, so to speak. In the market's looking for reasons to sell and lock in profit, and I think this geopolitical uncertainty could be the reason now, at least for a mild correction. Just to stay put. Be careful, obviously, if you have a profitable position. So what we do here, we lock in profit as we go. If there is a very, very high risk positions, we will take stop losses as we go, and then obviously buying back when things settle, when the market is back into a what we call technically fair price around the moving average, because we know that sooner or later the market will come back into the technically fair price, touching again the moving averages. It just sounds like overbought to me. Just to wrap it up, I won't be shorting, but I will be positioning myself strategically. We're already holding 2 gold stocks. We're just going to be strategically positioned into and keeping our holding of gold stocks, taking profit in high risk areas, and obviously wait sidelines with cash to be buying great quality positions once they come down into obviously technically a fair price or even discounted price. Thanks for watching. I'll see you next video.